Hey everybody, it's Eddie here, and in today's video, I want to share with you guys the best investing strategy for 2021. If you've never invested or just started, you're probably wondering what kind of strategy to choose. Because at the end of the day, investing is all about strategizing. You're trying to figure out what kind of goal you want to achieve, work backwards to choose the right stocks, right funds to help you achieve that goal. So I'm going to share one of my investing strategies, and I'll show how you can also build out your own portfolio towards the end of the video. So if that sounds interesting, definitely stick around. Just a reminder guys, I am not a financial advisor, nor this is financial advice. So make sure you guys do your research and due diligence before you guys do any sort of investing. Now, if you're just getting started, you usually open up one brokerage account such as Robinhood or Webull and start buying stocks there. But over time, you start to open up different brokerage accounts for different purposes because you start to realize that you can't handle everything under one account. And as you start to buy certain stocks and different funds, you start to build out your portfolio. There are different types of portfolios you can build out, but for most average people, they like to stick with three basic ones. First is a dividend portfolio, second is a growth portfolio, and the third is kind of a mixture of both. A dividend portfolio consists of companies that pay out dividend yields every month, quarterly, semi-annually, or annually. Meaning that if you've built out a dividend portfolio that pays out an average of 5% every single year, then if you've invested $500,000 into it, it will pay you out $25,000 every single year. On the other hand, growth portfolios focus on growth, percentage gains. So the trade-off is that usually they don't have very high dividend yields, or they have none. If you have a portfolio of both, then you are still getting the growth, but not as high as you would with the growth portfolio, and you would also get a dividend yield, but not as much as a dividend portfolio. In most cases, dividend stocks are less volatile than growth stocks, and at the end of the day, one is not better than the other. It really depends, again, on your strategy. So now you're probably wondering, Eddie, which one is the better one? Which one should I choose? Which one should I go for? Well, I'm gonna share what worked time and time again, and that is to invest into quality companies consistently, buy and hold. Holding is probably one of the best strategies when it comes to investing. Now, in terms of how long to hold these stocks, well, it really depends on how long you want to hold them. Now, the way that I will be investing throughout 2021 is through M1 Finance. You guys may have heard of it, but it's one of my favorite apps to use when it comes to dollar cost averaging and investing without stress. I have a referral link down below. If you guys sign up with my link and deposit $100 until February 28th, you do get a $30 bonus. That is a 30% return already on your initial investment. And this is not a sponsored video. It is just an app, a platform that I really love using, and I hope you enjoy it as well if you choose to use it. If you guys are watching this after February 28th, you guys can click the link and check what kind of bonus they're offering at the moment. This is definitely not going to be the last video I create on M1 Finance. I will create more content about this platform because I love using it so much, because it is such an easy way to invest. You can dollar cost average into the market, so whether the market is up or down, you are investing consistently, which takes the emotion out. And you can also schedule automatic transfers so that you don't miss a week or a month to invest, and there is zero fees using the platform. Now, if you're not familiar with M1 Finance, you can create a basket of your own stocks that you want to invest in. For example, if you wanted to invest into Facebook, Amazon, Apple, Microsoft, and Google, this is how much you're gonna need to buy one stock of each company. And that's really expensive for most people. But with M1 Finance, you can invest into all of these companies as little as $25. So you're buying fractional shares of these companies. So if you're investing $100 equally into all 5 companies, then $20 will go into each company. And of course, if you wanted to invest a little bit more into a specific company, you can lower the percentage on one and increase it on the other. At the moment, my portfolio is set up as a growth portfolio. I label it as my growth pie, and I'm also treating this like a high yield savings account. If you guys want to check out that video, the link will be up here or in the description box below. I pretty much just throw any extra cash that I have that I don't need in the near future so that my money is working for me versus doing nothing. Out of the 10, 6 of them are ARK funds. One is QQQJ, VTI, invested in Tesla, and 3 months ago, you would be up 50%. A month ago, you'd be up 10%. And in the last week, you would be up 4%. There is an expense ratio of 0.44%, meaning every $100 you invest, they are taking 44 cents away. And that's because ETFs are usually actively managed, especially ARK funds, they're pretty expensive. But in return, I do get a dividend yield of 0.566%. So in a sense, it does kind of offset, and I also get very aggressive growth. it's also important not to have too many slices, too many companies within a pie. Because if you have too many companies and they are all in different sectors, then might as well invest into VTI or QQQJ or an index fund that tracks the NASDAQ or the S&P 500, which is going to be relatively safe. But if you can focus down on a few that you know are going to perform well, why not focus on those 10? I'd rather have 10 quality employees that I know will perform well versus 50 where some will be okay and some won't, and it's just really hard for me to keep track of all 50. I personally love ETFs because a lot of these companies' goals, like ARK, is to help their clients make money. They actively manage their funds, buy and sell stocks so that we make money. So why would I want to spend time and research into choosing the right stocks when I can pay ARK just a small little expense ratio to do all the work for me? Now, the reason why I am focusing on a growth portfolio over a dividend portfolio is because I'm trying to increase my cash position as quick as possible. I believe that it's really important to work hard in the real world for your money, but also have your money work for you. And the best way to do that is just to invest. I know investing can sound a bit overwhelming and scary, and there can be a lot of uncertainty because I definitely felt that way. But M1 Finance is great because you can invest $10 here, $25 there, $50 there, and then once you start to see results and you get a little bit more comfortable with the market, then you can start investing a few more dollars. But I will be investing into these specific stocks for at least minimum 2 years, hopefully 3, and then I'm going to slowly scale out of my growth portfolio into a dividend portfolio. A dividend portfolio to me is much more attractive than a growth portfolio because this is something that you can hand down to your kids later on in the future, and this is an excellent way to generate another streamline of passive income. Now, this whole video can either be extremely overwhelming and confusing, or a light bulb turned on, you're extremely excited, pumped, and you're excited to invest. But I just want to remind everybody who invests to really focus on their cash flow first. Investing is not really fun when you don't have the money to invest, but if you can figure out how to generate your income, have multiple streams of income, and you have cash flow coming in, then you're gonna put that cash, that money into investing so that your money will work for you. The purpose of investing is to generate wealth over time. It is not a get rich quick kind of thing or activity that you do. The market will go up and down, but as long as you guys invest consistently, buy and hold into quality companies, you should be okay. Also, do not invest your emergency fund or your life savings into any account. It's important to be responsible and wise with your finances, so make sure you guys are willing to invest a certain amount that you're comfortable with. That way you can also live life comfortably as well. Well, if you guys enjoyed this video, please give it a big thumbs up. If you guys have any questions, let me know in the comment section down below. I do my best to reply. Also, there have been a bunch of spam comments and even accounts that are impersonating me. So please be careful, and if I ever do reply, I will have a gray box around my name. Invest responsibly, and I'll see you guys in the next video. Over. Good night, good morning, adios.